Welcome to the deep dive. Today, we're jumping into something our sources are calling the Apex strategy.
Mhm.
It's basically an integrated framework for achieving what they term ultra high net worth.
Right.
So our mission here is to really pull apart that pathway to, rapid wealth creation.
And it's about a huge shift in thinking. You have
Dude.
to move beyond just linear salary growth.
Which is always capped by your time.
Exactly. It's capped. The goal is to get to geometric capital growth. And to do that, you need to leverage three things: human capital, scalable capital, and financial capital.
Okay, but let's talk about the very first wall you hit. Our sources call it the access bottleneck.
Yeah.
What is this SEC status thing and why is it so critical?
It's the accredited investor status. You can think of it as a kind of gatekeeper
A gatekeeper to what?
to the really high alpha markets. And by high alpha, I mean investment opportunities with returns that, significantly beat the normal market benchmarks.
So how do you qualify? What are the rules?
There are two main paths. Either a household net worth of over $1 million,
Okay.
and that excludes your main home, or an annual income of at least $200,000,
Or 300,000 for couples, right?
right, for 2 years in a row.
So the fastest way to build wealth isn't just about accumulation, it's about gaining that specific access.
Precisely. That access opens doors to private markets. We're talking venture capital, private equity.
Places where you can get in on the ground floor.
Exactly. You're investing in assets before they go public,
Mhm.
before that growth gets diluted. You're capturing the exponential curve at its earliest, steepest point.
Which brings us right to phase I, accelerating your income velocity. Since income seems like the quickest path to that status, what are the sort of tactical shortcuts?
Well, the data is pretty clear. You don't necessarily need a multi-year degree.
You mean high ROI certifications?
Yes. Look at something like the AWS Certified Solutions Architect. You can get that done in, 3 to 6 months?
And what's the salary outcome on that?
You're quickly looking at roles earning between $120,000 and $150,000. The time to value is just incredible.
Okay, but what if you want the absolute fastest track?
Then you're looking at the high-stakes professional careers.
Like investment banking. Our sources say a VP in that field,
Yeah.
their total compensation can hit $500,000 to $700,000 a year.
Right. Which instantly gets you that accredited status. Or you have these specialized AI and machine learning executive roles.
I saw that. Up to 428,000 plus?
The numbers are astronomical, yeah. But the sources are also pretty clear about the cost.
The time commit.
It's a massive lifestyle trade-off. You have to factor that in.
Okay, so let's assume you've done it.
Yeah.
Hit the income target, you have access. Now we pivot to the geometric engine.
Scalable capital. Entrepreneurship.
This is where you stop selling your time and start building systems. The potential returns are huge, like 15 to 30% on average.
But the risk is also huge.
Oh, absolutely. 9 out of 10 startups fail. But the focus here is on scalable digital products, automation services, that kind of thing.
And this connects directly to Pillar 3, which is the fuel, advanced investing.
So if your business is the high-risk engine, your investing strategy needs to be what? Not just basic savings, I assume?
No, not at all. It's all about tax-efficient reinvestment. This is where we move beyond the usual advice.
So it's more than just start investing when you're young.
Way more. For this strategy, you're leveraging things like the Qualified Small Business Stock Exemption, the QSBS.
And what does that do? In simple terms.
It potentially lets you exclude up to $10 million in capital gains from federal taxes when you sell that stock.
10 million, wow.
Yeah. I mean, think about what that does for your ability to reinvest that capital into your next venture. It's a massive accelerator.
So let's just recap the whole integrated strategy then. It's use your human capital, your skills, to get that accredited status as fast as possible.
Mm-hmm.
Then deploy capital into a scalable business for that exponential growth. And all the while, you're reinvesting profits using these really advanced tax advantage tools.
Exactly. But this all raises one final, very important question for you to think about.
Okay.
Given that both entrepreneurship and early-stage VC are incredibly volatile,
Mm-hmm.
how should you architect your core portfolio?
So what do you do with the rest of your money?
Right, and the sources are unanimous on this. You need to structure a highly resilient core portfolio first.
What does that look like?
It means focusing on quality, on companies with consistent profits, on dividend growth. You build your financial defense before you launch your high-risk offense. You have to build that bedrock first.